Welcome back. You're watching the Small and Mid Cap Show. Well, a slew of cement companies have taken price hikes in April. However, we did see some kind of price cuts in the last quarter, and the realizations and volumes have been suppressed because of this. To talk about this more, we have Uttam Kumar Srimal, Senior Research Analyst, Cement and Infra from Axis Securities, who joins us now. Welcome to the show, sir.
Yeah, thanks a lot for having me on the show.
Right. So I just wanted to understand that this kind of price cuts, and now we are seeing that some kind of price hikes are taking in April. Which companies do you think will be affected the most, and which ones will be affected the least?
See, basically, when price cuts happens, most of the companies get impacted, and similarly, when price hikes happens, most of the companies get benefit out of the same. So there is nothing as such. Some company will get benefit, some company will not get. So whenever there is price hike, it is across. Now it depends on which region gets first price hike. So region-wise, there may be some impact on the companies positively or negatively. But overall, when price hikes are on an informed basis, all the companies get a benefit of price hikes.
Sure. Is there a specific geography, sir, which is seeing a better traction when it comes to the price hikes, because cement is so geography specific?
See, basically, what happened during last quarter, southern and eastern part saw a major price decline. And it is been expected that the price hike will be higher in those regions if there is any price hike moving ahead. So based on that, the companies operating in the eastern and southern region may get more benefit out of the higher price hike. Similarly, in the other regions such as the north, in western and central region, price decline was lower compared to eastern and southern region. So the price hike may be around 10-20 rupees over in the month of April. So they will get benefit as per the price hike.
Right. But Mr. Srimal, I just wanted to understand which are these companies, if you can just tell us.
See, in the south region, if there is a price hike in the eastern and southern region, so Dalmia is there, Ramco Cement is there, Steel Cement is there, and Ultratech is there, HEC is there. So these are companies which will get better benefit if there is a higher price hike in the southern or eastern region.
Sure, point noted. Now I want to switch focus to Q4 because you're going to see earnings and estimates of course starting to trickle through, but we'll start to see the earnings numbers start to trickle through. Price corrections largely going to impact the Q4 numbers. How are you viewing the numbers from your side?
See, in the quarter 4, initially there was demand dip in the month of January, but demand picked up in February and in March also. And we believe that volume growth will be around 8 to 9% for cement companies in this quarter. Although price decline has been there between 5 to 6%, but since it's the fourth quarter where operating leverage benefits are there, plus you should also remember that last year power and fuel costs were quite high. This year, it has come down drastically. So there will be benefit of power and fuel cost this quarter compared to previous quarter last year. So that will reduce the impact of price decline during this quarter. But there will be impact on based on the current price decline on the companies. But overall, Y-on-Y basis, we see growth both in sales, EBITDA, and PAT moving ahead.
Also, I also wanted to understand that a lot of these cement companies are doing a lot of capacity expansions. Now, do you think that the demand is enough to completely utilize these capacity expansions that are taking place?
Yeah, see, normally cement demand goes with the development GDP growth. So if GDP grows around 7 to 8%, so cement will also grow at 1.2 times of that. So although there has been capacity addition by most of the players, whether it is large, medium or small, but demand is also there. So normally capacity utilization in cement industry remains between 65 to 70%, and we believe that even after this capacity expansion, cement utilization will remain at 65 to 70% moving ahead also. So incremental demand will be there to absorb incremental supply moving ahead.
Sure. And do you see, with regard to valuations, do you see comfort currently in the sector? Because we've seen some re-rating, at least in several of the names that we've seen a re-rating in. Do you see valuations currently to be within that comfort zone?
See, recently, if you see, cement stock prices have corrected. So valuation, I will not say it's not very high and not very low at this juncture. So we can say there are companies where valuations are still cheaper than what it was earlier, because before price correction. So I can say at this juncture, valuations are more better compared to what it was a month back.
And Mr. Srimal, I really want to know that what are your top picks, what are your selected picks in this particular space?
So in large cap, we like Ultratech Cement because of its pan-India presence, continuous capacity expansion and gaining market share. In the mid-cap space, we like JK Cement, Birla Corporation and JK Lakshmi Cement. And in the small cap segment, we like Star Cement.
Okay, completely out of time on this one. Thank you so much, Mr. Srimal, for the views and thoughts. And it's good speaking with you and getting that perspective with regard to cement. Plenty happening in that space. But you know, completely out of time on this one. Thanks for staying tuned with the Small and Mid Cap Show here on NDTV Profit. From Mahima, myself, everyone who puts the show together. Thanks so much for watching. Stay tuned for more on the other side of this break.